I'm your host, Daniel Robus, and we're in for a bumper episode. We've got Devin Shutte in, and we're talking about things where Daniel should never go. We're going to be talking a little bit about investing. But Devin, if you don't know him, then you clearly haven't been listening to the news and watching the news. You're a market commentator. You're a portfolio manager. You're head of investments on the Robert Group currently. You have a long list of achievements in the work world and in your personal world. And possibly my favorite is you're an unapologetic, positive person and an optimist. So Dev, before we begin, you immigrated from Johannesburg to Durban. Where do you possibly go on holiday now that you live in paradise?
That's the trick, right? Is that the holiday comes to you. I love it when my fellow Valis join us down here. The other Italians less so, but yeah, look, living in a place where people go to holidays is just an absolute privilege. And I think with the world we're in at the moment, you can invest from anywhere, and you can also manage investments from anywhere now. You know, whether we're in the tip of Africa or the Wall Street itself, the world is a different place as you know it. I mean, we're chatting here now and it's like you're in my lounge. So love it.
Yeah. You are head of investments. What does your grand think you do for a living?
I don't know if I can explain it to her. but yeah, I mean, it's essentially we're a private wealth management company, and we've got the responsibility of managing our clients' retirement savings, which is, can be pretty daunting. But one thing about the investment industry is that it's not simple, it's not easy, and the facts speak for themselves that people often get it wrong more than they get it right. So we're just kind of trying to be there to coach them through it, to provide some experience and manage what is an inherently difficult thing but necessary thing. We all need money to live on now and in our retirement. And in the environment we are at the moment, what markets doing are at the moment, it's difficult, and even more so where our services are hopefully needed to guide our clients.
We've got a bloodbath on the crypto side. We've got the formal sector being impacted by all sorts of global uncertainty. It must make your job quite a tap dance. Where do people put money now?
Yeah, it's difficult. Well, I would typically say markets, if you look at the NASDAQ, which is the technology exchange in the US, down 25% at least since its highs. I'd say it's on sale, 25% discount. But you say that flippantly, it's very difficult to put money to work when exactly what you said, Dan, is when the environment around us is so negative, so volatile, and so uncertain. And I think, where you put your money now is an interesting one, and we can definitely unpack that. What I will say, though, is that when you're looking to invest, everything has that dynamic in investing of how much risk can you tolerate versus then how much potential return could you take on. So you mentioned crypto. Crypto has some fantastic returns when it's going up, but in order to earn the right to have those returns, you got to stomach the downturns, and we're in those at the moment. And unfortunately, what you're seeing this week specifically is a lot of people didn't have the stomach for that and sold at the absolutely wrong time. And then you can argue that it wasn't the right investment class or type of investment for them. So when we look at what's the right investment, we actually psychometric test our clients. We try to understand what is your inherent tolerance for risk, Dan. How much volatility or temporary loss in your investments would you be able to stomach and still be able to sleep at night, and how much is just too much? And that tolerance is not a result of experience. It's not a result of how much it's just part of your emotional makeup. And so we try to determine that and then customize the investments to give you one that is just comfortable enough for you to hang on, but give you the opportunity for those higher returns.
It sounds like your job is driven by data. Where do you source this? What gives you a step ahead of everyone else?
So look, it's interesting because data, my industry has changed massively in the last 20 years. 20 years ago, someone like me who was managing money, a stockbroker or portfolio manager, had all the information, and clients would come to us and they'd say, what do you think about this share or this fund or this market? And we would then advise, and they would pay us for that. Clearly, with the advent of the internet, the information is fairly freely available. So you could go look and research and know as much about a specific company, maybe a Netflix, as I could. I think where the differentiator coming in is, what do you do with that data? How do you handle it? How do you approach it? And that, interestingly, is, to my mind, one of the mysteries of investing, is that it is much more a soft skill than hard science. And what I mean by that is that you can be the most qualified in investing, and there's numerous examples in history of this. You can have PhDs in portfolio management, and you can be someone who has zero experience, but through a few key things that you do, is able to generate significant long-term wealth in the financial markets. And it's the only industry I really know that does that. I mean, if you're going to a surgeon, you want the most qualified surgeon. If you need an engineer, you're going to do that. Unfortunately, investing works very differently. And so definitely a lot of soft skill and more art than science.
Where do you educate yourself? Podcast, book, newspaper? Give me 3 where we should be reading at the moment.
So I think, podcast is one of my personal favorites. And I think that is because you're getting into the minds, some of the greatest investing minds, and you're able to unpack their processes and their methodology, but it's their thinking and how they've handled difficult situations and unpack those. So, we've got access to people that we would never usually have access to in the past, and that's fantastic. Another one, although it does come under a lot of criticism, is Twitter. And I know the short form characters aren't great, but there's another example of direct access into thinking of some of the best minds. In my case, it's the financial markets. You could be in medical science or whatever the case is. And it's the speed of information transferred on Twitter is faster than I've ever seen. I'll give you a perfect example. I think it was around whenever the Japanese earthquake was at Fukushima. Yeah. You'll remember that, and it hit the nuclear reactor, and there was a leak there. I came into the office in the morning, and I was watching the Asian markets open and trade, and suddenly I saw the Japanese share market collapse. I saw Hong Kong collapse. I saw Taiwan, and I was like, what's going on there? And I went into all the mainstream media, TV channels, Bloomberg, CNBC, the likes, and there was nothing. And then I was on Twitter at the time. Shows how long I've been on there. I think it was probably 12, 13 years ago, one of the first guys on there. And then there was a tweet from a trader in Japan saying reports of an underwater earthquake hit this nuclear plant, unconfirmed. And over the next few minutes, those came out and confirmed. And half an hour later, kind of the mainstream media came on and said, yes, it's happened. And by then, all the money had been lost. You didn't have time to react. And it was then that I realized, for all the vitriol and the polarization that Twitter can bring, it's got very powerful, direct information that very few other platforms have.
Who should we be following? Who's a fountain of wisdom for someone like yourself?
Look, I mean, he's not big on it, but Warren Buffett is always a great quote for investing. There's a lot of obscure guys, and I can give you a list of them if you want to put them in the show notes. But I think oftentimes it really does come down to people who sometimes will share the same philosophy as you, and sometimes people who share an exact opposite philosophy, and it's challenging to kind of take those views on board, mull them around, see what you agree with, what you disagree with. Twitter is rich. There's really so much. Excellent. And yeah, I can give you a lot there.
Excellent, Dev. You did mention a couple of podcasts as well. I'm going to get to your reading material. So you listen to a couple of podcasts. You don't have traffic anymore, so you got to carve out that time and make that trade-off for the time. What are you reading? And are you hardcover, or do you make notes? Are you still in that from your lecturing days, or are you tablet reading?
No, so I still like the good old paper. And I've discovered I now got a library card at the local Salt Rock Library, and it's been unbelievable. They give you 10 books for 3 weeks. So my reading is often more pleasure than anything else. So a lot of fiction, a lot of spy novels, that type of thing. But when I'm reading for work, a lot of it will center around behavioral psychology. So understanding people, what makes them tick, what makes them make certain investment decisions. Because you got to remember, if you kind of strip away the investing world and financial markets, all it is this group of people buying and selling things against each other. And if you understand what could make the majority of people tick, and you're able to get ahead of them or position yourself in a way that you can benefit, that I believe is a competitive advantage. And if I'll circle back to what you said up front about me being an unapologetic optimist, is it's easy to be pessimistic in this world. You can just open up any platform and you can have enough things to confirm a negative view on the world. But I just don't think there's a competitive advantage on there, because if I had to predict the next market crash is coming this year, and there's going to be financial Armageddon and markets are going to go down 50% from here, bar maybe trying to protect my portfolio a little bit, there's no upside to me except being right. But on the good chance that I'm wrong, there's huge potential upside as human innovation and everything comes through, and these companies find a way to deal with the latest crisis, whether it's Ukraine or China lockdowns or inflation, whatever the case is. And so, being positive in financial markets is really an endorsement on human ingenuity and the ability to overcome problems. So to my mind, being overly negative in the financial markets is long-term a losing bet, but you got to be cautious and weigh that up. So, that's one there. And then on podcasts, there's a great one at the moment. He's a seasoned investor in the US, Howard Marks. He runs a company called Oak Tree Capital, and he writes a monthly newsletter that is now put in podcast form. It's brilliant. It just kind of gives the inner workings into his thinking. He's able to hold two opposing ideas very comfortably when he debates things out, and you're just able to glean 50 years of investment experience by tapping into that. So wow, that's been one of my favorite moments.
I think that investment and wealth management is so scary just because people are uninformed. And that concept of creating wealth is something which evades a lot of people, because we're not taught it at school. We're not taught it anywhere. You actually have to go and get it done. If you had to speak to some graduating kids that are coming into the market, what 3 steps to creating wealth would you say these are non-negotiables? Like, do this now. And then let's talk for 45-year-olds who are staring down the last 10 or 15 years. What 3 steps could they take to get a little bit more healthy and in charge of their lives?
Cool. I like that. So, all right. So graduate, and I have these conversations fairly regularly when, I'm interviewing them, potentially looking to join us. And my message is always the same there, is that the qualifications in investing and financial markets are great, and they show a discipline and a tenacity to get something done. But until you've experienced the emotion of investing, you half the game you haven't even been exposed to. So I always say to the guys, and to your point, is just start. Kind of roll up your sleeves and just start, albeit how small it is for you in investing. You've got to learn that when you put in that initial investment and you see it go up and you feel the euphoria and all that comes with it, and think, geez, this is easy. I could do this for a living. And then the absolute dread and fear when you see it moving down, until you've gone through that and multiple times, you're unable to truly manage investment. So my first advice would be to actually just start. Then the key to being successful is to be able to manage those emotions. And the reality why investing, there's a famous Warren Buffett quote, and it says, investing is simple, not easy. And it's so true, because most investors struggle with investing because they can't control themselves. The biggest risk to any investment is the investor themselves. And it's because of those emotions of fear and greed. They are so strong and so prevalent that all someone like myself in the markets can bring, and I'm not immune to this either, is that I've been through many of these cycles, and I'm able to maybe counter those emotions a little better. It doesn't make it easier, but to know we've been through this before, and we'll survive again, is critically important. And when you see what's happening in periods now where the markets are down heavily, crypto's down heavily, what's actually happening in this market is, if you're able to remain emotionless, there's a transfer of wealth, literally, from people who don't have the stomach to handle this to people who do. So, if you bought 6 months ago and you're now down 30%, and it's massively stressful for you, and I have a lot of sympathy, and you're selling to someone who's sat on the sidelines and deciding to buy. So you're losing, they're buying at 30% discounts, and when that goes up, that's where the true wealth creation happens. Sure. So, sure. I think my two messages are to get started, buy that first share, invest in that first unit trust, whatever it is, so that you can be invested and you can really feel those emotions. And then also just to be in control of those emotions and aware that they're going to make you do the polar opposite. Investing is buy low, sell high. How hard could that be, right? It's actually the hardest thing in the world, and your emotions are going to try and make you do the opposite.
Yeah. There's a lot of wisdom in there. I really like it. Just start. Get going before you want to get good is what one of my mentors says the whole time. You got to have something in the game. Could live anywhere in the world, yet you've chosen to take your family and live in this little part of Africa. Why?
Look, personally, I just think we live in the most incredible country. Yes, it's raw. Yes, it's in your face. Yes, it's unnerving. And we seem to take ourselves to the edge of the abyss more often than I would like. But it's just the most beautiful place to be. And I think coupled with that is that with all the clear problems that we do have socially and economically, it provides massive opportunity. And I think that's what really gets me excited, is that, you can go live in a more developed country and things just work there so well. But I think we have the real opportunity to make a difference here for our families and for society. And that's what gets me up in the morning. That's what keeps me going and get me excited. And I look at the data often, and yes, we could be doing so much better, but we could also be doing so much worse. And I think South Africa in many ways is uniquely positioned to show the world how to do certain things. You're in the tech space, and there are South Africans doing some absolutely mind-blowing things. And my sense is that we're incredibly well positioned to continue that and actually be a kind of a beacon of excellence and hope and skill, not only in tech, investing as well, and so many other industries, oftentimes out of pure necessity, right? We don't have the luxury of everything we need. And so the innovation is called to the fore. So yeah, I get excited, man. And then just bringing it back to financial markets, Dan, it's amazing. 2 years ago, people were sitting in front of me and asking me genuinely, is South Africa still investable? Like, can we actually keep money in here? Should we just externalize it? And my view was similar to what I've just said. I said, that we've got very real problems. Be very careful where you go. And I think there's opportunity here. What's happened 2 years later is, the tragedy of the conflict in the Ukraine. We're far removed from that. We've continually economically reformed. We're making progress in that regard. And we've got a whole lot of resources that we're mining. And suddenly, from an investment perspective, South Africa is this safe haven where there's some growth. It's amazing for me. I chat to global investment managers that are actually looking at South Africa as this little investment safe haven 2 years later, when they're asking, can we even put money to work here? So, it's cyclical, but it just goes to show you that markets can be fickle. but there's opportunity. And South African equities and bonds at the moment globally are in a sweet spot.
If you had an open checkbook, what are the 3 areas you would make change on in South Africa to make it even more attractive for foreign investment? Where would you smash out changes?
So I think for me, it's not all of it needs money. It just needs political will. So I think the environment that businesses have to operate in is just really hostile and more cumbersome than it needs to be, right? The amount of red tape and bureaucracy is just not conducive to businesses thriving. And that is literally sometimes just the stroke of a pen and signatures, so I think so much could be done there to unlock this pent-up demand for investment and for business. There was the mining indaba this week, and the mining companies in South Africa said that they could invest 85% more purely if the bureaucracy was removed. I mean, you're talking tens of billions of rand that could go into our economy, get our people working and really growing. So to me, that's the main thing. And then I think from kind of a foundational level, I think our people need better outcomes in the education system, better skills. And I'm not necessarily saying traditional education. We got to get smarter about this. We've got to, instead of teaching people about information, which is freely available, we've got to give them skills, whether it's tech skills, whether it's artisan skills, whatever the case is, that they can productively engage in the labor market, add value, and earn a decent wage. Just to try help people with social welfare, which is so important, is one thing, but people want to contribute and they want to be paid for that. And we're a long way off there. So yeah, I'm not sure it's a checkbook thing so much as a will thing in those 2 areas.
And I mean, I think that I'm still of the generation where I remember technicons, which were teaching people skills which you can then sell. And I just wonder what happened with those. It just seems to me we want to send people to get a degree, but we don't want to send them where they can get a checkbook. I don't want people to be thinking about working at a company. They should be creating companies.
Absolutely.
So now I've asked you very easy questions, Dev. For a new starter who wants to emulate your career, what is the mistakes they could avoid that you've made?
Sure. Okay, so let's go back to those emotions I spoke about, fear and greed. I think when you're starting, the greed is very strong. And the desire to fast track this wealth creation journey, which, if we're honest with ourselves, takes a lot longer than anyone would like. I mean, you look at Warren Buffett's kind of net wealth through his life. He started investing in his teens, and I think he only became a billionaire in his 70s. But from there, it exponentially rose. And I think, as unpopular as that is, these things do take time. So, the get-rich-quick schemes and that, to try to steer away from them, I think that it's really about being consistent, having a long-term mindset. In fact, there's a fantastic study, and if I can find the link, I'll send it to you as well. We can put it in the show notes, where Harvard did a study, and they looked at people from all walks of life and industries, and the ones that had, kind of self-actualized and become massively successful, and what were the key ingredients to that. And they looked across the board, and they couldn't find any similarity except for one. And the one similarity was the ability for these people to think long-term. So in other words, not thinking about, well, if I get in money, what am I going to spend on it this weekend or end of the month or even end of the year? But what are my decisions today going to mean for me in 5 years' time, in 10 years' time, in 20 years' time? And the further they could think long-term, the more successful they were. So, a stupid example, and the financial planners always use things like this, is, instead of buying that, I don't know, 1,000 Rand, whatever it is, what costs 1,000 Rand these days? I don't even know. Okay, Apple iPhone. I say Apple iPhone costs 20 grand and you're going to pay for it cash. If you have a phone that's already working and you take that 20,000, delay the gratification and think long term and invest that 20,000, maybe even buy Apple shares itself, which is the payoff in 20 years' time. And it's clearly obvious, not the immediate consumption, the delayed gratification, and the investing for our future. And we make these decisions all the time. That is the most powerful driving force for wealth creation, but one that doesn't come naturally for us. I mean, you've got kids, they're getting a bit older now. How hard is it to teach them about delayed gratification when it's that ice cream or that, next piece of tech they want? It's very difficult.
Yeah, it's very difficult. So you would say for the mistake is to try and rush through it, and especially for our people who are working in a corporate environment, trying to climb too quickly before you've got the scars under your belt.
Yes, I would say that. I take it a bit further to say that I think we're in a generation that wants assets and a lifestyle as soon as possible, and often, if you haven't given that time to build up, to be able to afford that, you take it on with debt. And debt is a negative investment return, right? It's the opposite of what good investing will do. It compounds negatively against you. So you spend now and you pay for it over time, whereas saving is you save now and you get something bigger later. So to your point, yes, absolutely, that can be damaging. There are some forms of debt that are healthier, if I can say that. If you take out debt to invest in an appreciating asset, so that may be a business, that may be a home, but that's not necessarily guaranteed. So I think it's trying to get ahead of yourself can be incredibly risky. It's not a popular message, but we see it all the time, and it's incredibly valuable.
And I mean, it must be quite scary being in your shoes, because mistakes that you make impact people's lives. Does that ever weigh you down? Do you ever hit a slump?
Yes. I mean, it's, I'm as prone to emotions as everyone else. And, I've made plenty of mistakes in investing before. And unfortunately, it's even worse because it's not only my money, but it's money of our friends, family, and clients. So yes, and I think that's the skill as well as the responsibility in a role like mine is being able to overcome those potential emotions and still being able to act. I mean, I can think of many investing mistakes. We invested in Steiner for our clients that turned out to be just a massive disaster. How we moved past that is that our clients weren't only invested in Steiner, it was a holding in an overall portfolio. But it hurts, and you do a lot of soul searching when those type of things happen, and back to the drawing board. What I will say is, post the Steiner disaster and our clients losing money, is that our investment process and the way we manage potential risks is far better. We are much more skeptical of management and companies that are overly complex and acquiring a lot of companies we don't understand. So I think long-term, our clients will actually benefit from that mistake, but short-term it hurts, and no one likes to make money and lose money. And going back to the emotions, Dan, they've clinical psychologists have proved the emotional pain of loss, and in this case financial loss, is twice the strength of the euphoria of making money. So naturally, people are so trying to do everything to avoid that risk and that loss, that oftentimes they don't end up doing anything, or they're overly conservative and they don't give themselves the opportunity for the potential returns. So
they would rather exist in the safe little bubble than step out and take the risk. But that's not living.
No, I mean that's it isn't, and even it doesn't make financial sense. So we see a lot of people with all their money sitting in the bank. If the bank is giving you less than 6%, which is what inflation is at the moment, you're guaranteed you're losing money every year. But it feels safe because there's no risk of your capital going down. But that money loses its purchasing power, and you can buy less every year. So by trying to protect yourself, you're actually losing. So we need to find that sweet spot where we take on enough risk that we can sleep at night, but that gives us for the opportunity for returns, which is an uncomfortable dynamic, and one we all need to work on.
Yeah. So you lead you look after investments for the group. You've got a team that you look after. Are you in office now? Are you totally remote?
No, we're in the office. We've got our investment team. We all have different kind of roles and responsibilities, but because the investment markets are so dynamic and literally kind of on a minute by minute, things can change. When in 2020, after the severe lockdowns were easing, I think we went to level 4 and we were an essential service. I said to the guys, look, I'm going back to the office. I need to be there. We've got all our software and tools set up. Everyone's to come back. Please do. And the ones who want to work from home, you're more than welcome to. And the entire team came back. And I think, that was their decision. And we just function better. There's hundreds of conversations through the days on the news flow. And as our investments kind of move through the day and through the weeks, that we need to be talking to each other and making decisions as a team. So, I was proud of them for that. It worked for us. We managed the risks in the office, but yeah, we were better off for it.
So then as a leader, so not as Dev, the investment person, as a leader, what are the tech apps that make you more effective today? We've got Twitter. You've said that. But that's not helping you manage your team. So I imagine you've got WhatsApp as well, which is in there.
Yeah, we use that. We are Excel freaks. If we can build any model on Excel and make it look cool, we will do that. We're not at the stage where we don't do it in-house, but we take our Excel models, which can actually be eye-watering. I mean, one of the days, one of my analysts had an Excel formula that I think that was 20 lines long. And I tapped him on his back and he lost his place in the formula and had to start again. And so, we're now getting those kind of coded into HTML so we can put them on websites and that. We love Excel. We like the Google Suite because it's kind of, you can collaborate in real time on that. We run the business of the Google Enterprise. And we've realized as a business, one of our top 3 priorities for the next 10 years is to be tech driven. In my industry, if you've ever done a insurance policy or an investment into a unit trust, the paperwork is eye-watering. And it's just, quite frankly, it's unacceptable. In this day and age, we shouldn't have to do that. And so we're constantly looking to remove the friction in the process to make it easier for clients to engage with the financial markets. And we're making strides, but you're fighting legacy industries and systems, and that's a big goal of ours.
Is the legislation keeping up with the change in technology and what technology enables? Because you are driven by legislation, which is there to protect me. But is it changing sufficiently to allow you to be as nimble as a crypto investment platform?
Yeah, no, I don't think so. I mean, I understand we love client-centric regulation. It's a differentiator for firms that embrace it, but oftentimes it just hinders the process. I mean, I'll give you a fantastic example. The KYC, the FICA process is, how often your bank or any institution you engage with asks you for it, and it is so infuriating. Whereas KYC should be the easiest thing in the world. It should be a single point of ID verification, and anyone can reference into that. And I know there are blockchain firms who are able to do this, but I think the regulation doesn't fully allow that yet. I think it's coming. I wish it happened yesterday. But you can imagine the efficiencies and the time and the frustration that will come from something like that.
Totally, I get you. Finally, your outlook for 2022. What are the rays of hope? Where do you get this inspiration for us for the rest of this year?
Well, I mean, core to that is people. It amazes me to see how South Africans and people in general are just so resilient and so innovative and overcome such hardship. I mean, in KZN here, we have had horrific flooding, and I'm not sure the extent of the flooding has fully been realized by the rest of the country. We had our entire household contents in a storage unit that was pretty much washed away, like nothing left. People have lost lives, lost homes. it's been devastating. And you walk around and you see the kind of the damage to infrastructure, but you just see how people overcome and push through in that. And, I just think, well, if we faced with that, and, we were faced with the riots, and we were faced with COVID and lockdowns, people will overcome. They'll find a way. And so, that gives me hope. And that, as I said earlier, translates into investing. You're backing people to solve humanity's problems. And if they can make money doing it, that becomes a good investment. So that keeps me excited. I think the responsibility of making sure the client's money that I look after is in as safe hands as possible, bearing in mind I also don't know what the future holds, but doing everything I can to protect that capital and grow it as much as possible. That really keeps me going. And there's opportunity around every corner, whether it's KYC in clients or, a new investment opportunity, it's there. It's just, are you open to it or not?
Brilliant. Devin, where can people follow? Where can they see what you're doing? They can hook up on Twitter, LinkedIn. Where else can we read here or find out where you are going and what your thoughts are?
Yeah, so Twitter's good. At Devin Shutte, I'm fairly active there. They can now do a lot of market commentary, throw in a bit of inspiration every now and then, try provide fact-based perspective. LinkedIn, I'm there. And then, my company is just the Robert Group, which is spelled robertgroup.co.za, private wealth management company. My details are all there. And I think, this is not an exploit you do alone. You need people to walk the path alongside you, whether it's a trusted mentor or financial advisor or something like that. We need to be held accountable for these emotional decisions, and that's how we get better.
Stunning. Thank you very much. That's a pretty good way to ask my last and final question. Have you entered Comrades? Are you running? And I know you are getting fit, but are you going in for a silver?
Yes, except for the last one. I will be there. I'm so excited. And again, just the discipline of having to train something for that. It's a long-term plan where you literally incrementally build to that. I think it's the reason I run, is the mental and emotional discipline and teaching you that tenacity, and that translates into a whole lot of areas of my life, including professionally and investing.
I think if I had to sum you up as I let you go, you really embody servant leadership. And I just want to thank you for your time and for what you do, and for how free you are with your sharing and your insights. And you have a gentle way of giving it across. For all our listeners, reach out, follow Devin, see what he has to say. There's wisdom there. From me, thank you. I really appreciate you giving me a little bit of your morning. Go forth and conquer. Have a lacquer weekend ahead, because when we record this, it was a Friday. I'm sorry I can't buy you a coffee or a drink, but enjoy it. And we keep you and the folks in KZN in our prayers as they go through this hard time. We will overcome. From me, Daniel, to you, Dev, have a lovely day.
Thanks, Dan. Been a privilege.